The Bloomberg terminal, accessed only by over 325,000 marquee investors across the world until now.
More than just business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, India's first digital live streaming business news service. And I am Agam Akil. Here are the top headlines. Asian indices opened mixed in early trade, with Japanese and Australian markets notching slight gains. And Standard & Poor keeps India's sovereign ratings unchanged at BBB, maintains a stable outlook. And Sun Pharma has issued a voluntary nationwide recall of its diabetes treatment drug Riomet, manufactured for the drug maker by contract manufacturers citing microbial contamination. And after Dabur and GCPL, Hindustan Unilever is also set to cut prices of few of its products to pass on the GST rate benefits. On to US markets, which rose on Friday as investors placed bets on a strong shopping season. And the S&P 500 hit a record high, rising to 0.2%. With information technology as well as the best performing sector. And the S&P 500 also closed above the 2600 mark for the first time. The Nasdaq Composite as well as the Nasdaq as well as the Dow Jones also moved up substantially higher. Of course, these shares gained on the back of Amazon, which also rose substantially. And of course, the Dow Jones also rose up by as much as nearly 0.1% at around 23,557. So on the whole, at least as far as the US markets are, well, they're looking good. But we'll also move on and take a look at what's happening in the Asian markets for now. And again, we've seen about a mixed opening when it comes to the Asian markets. We have Rosalind Chin of Bloomberg joining us to, so we'll just wait for some time before Rosalind comes in. But as of now, at least as far as the Nikkei is concerned, we're looking at a rate of around 22,600. So, well, still a little bit of consolidation carry on. But we'll be watching out for how the Asian markets pan out in today's day of trade. But let's move on to Indian markets then. We have Darshan Mehta once again joining us to tell us about what's transpired last Friday, as well as what we can expect in today's day of trade. Darshan, good morning.
Good morning, Agam. And suddenly, if you're looking at the SGX Nifty, that seems to have cracked. Until around 15-20 minutes ago, it was absolutely flat. Now it's seeing a big downtick, down almost 32 points, with below the 10,400 mark in trade. So suddenly there seems to be negative development that's coming in. Most of the Asian markets are trading flat in trade. As far as the ADR is concerned, IT seems to be doing well. Infosys was up almost 3%. HDFC was up. What didn't do well was Dr. Reddy's as well as Vedanta. So they were rather weak in trade. As far as the entire commodity pack goes, crude is trading muted after 4 days of rally. Even in overnight trade, crude was up almost 0.5% on Friday. And this all comes on the back of, the OPEC meet that will happen. That will consider supply cuts that could come in, and that could keep prices at an elevated level. As far as base metals are concerned, positive close for most of the base metals on the LME. Just take a look at the counters. So lead was up 1%, aluminium, nickel were up also close to 1%. The other counters that did well, tin and copper was up almost 0.5%. Zinc was the only base metal that ended with a negative bias on the LME. COMEX copper traded with a positive bias. It's currently trading. Even in China, currently copper and aluminium are up almost 0.5%. Steel is trading up close to 0.3%. Rubber seems to be seeing a little bit of traction on the downside. So rubber is down 0.2% in China currently. As far as gold is concerned, gold trades with a negative bias for the third straight session. Fund flows, FIIs were net sellers to the tune of almost 416 crores in the cash market. This is the NSE provisional data. DIIs bought in almost 427 crores, so pretty much even Stevens there. As far as the entire month is concerned, FIIs have bought in almost 16,500 crores. The DII buying is going up rapidly, so 7,600 crores of net buying by the DIIs in the cash market. This is the month-to-date basis. Nifty's ended with the positive bias on a closing basis for the 7th straight session. What did well, were counters in the IT and oil stocks. PSU banks and autos ended weak in trade. Now let's take a look at how the Nifty performed. The Nifty was up almost 40 points. So what IT as a pack did well. So Infosys contributed, ITC did well, the private banks did well. What didn't do well was basically metals and PSU banks. So Vedanta, Hindalco, SBI were down in trade. The biggest loser was pretty much ICICI Bank in trade.
Well, Darshan, we have seen the Nifty move up again, inching towards 10,400. What do the FNOQs telling us? See,
the FNOQs do indicate that it's a positive traction, because what we're seeing is that 10,200 to right up to levels of 10,400. Put writers are much more aggressive because they would want the market to go up. Now, as far as the Nifty was concerned, open interest was down almost 7 points. We're trading at a premium of 19 points, which indicates that there was short covering that was seen as far as the Nifty was concerned. As far as the bank Nifty was concerned, there were fresh long positions that were taken. It was up in trade. That was not the case with the PSU banking index. Even the PCR moved up for the Nifty. If you're looking at the PCR, the VIX actually cooled off, was down almost 3%. So that was the scene as far as the VIX is concerned. The PCR is moving up significantly from 1.35 to 1.46. You're seeing that the Nifty is up almost for the 7th straight session. So put writers are much more active in trade. Now take a look at what this is, the open interest change. So levels of 10,300, 10,200, 300 and 10,400 is where put writers are very active. So they would want to put, the bulls would want to defend the 10,400 bear mark. And even at high levels, call writers are shedding positions in open interest, indicating that the trend, at least as of now, is on the positive side. So that's what what we are getting. These are the two counters that enter the FNO band. GMR Infra was up almost 10%, so that's why it came in the FNO band. Syndicate was one of the top PSU banking performance that comes in the FNO band. What comes out of the FNO band was counters like TV18 as well as DLF. So these were the counters that will come out of the FNO band, so should be in focus. One of the biggest counters I'll watch out will be Jubilant Foodworks. It was up 5% on heavy volumes, and the open interest build-up was close to 41% on the counter. So certainly fresh longs being seen. Technically looks extremely strong. So probably the traction may probably continue on this one, Agam.
Absolutely, even we will be watching out for all those stocks going into today's day of trade. But now let's go across to Bloomberg's Rosalind Chin, who will give us updates of the Asian markets. Rosalind, hi.
Morning. Well, just a short time ago, we were talking about how some of the markets were marching higher, looking at South Korea and Japan. But in fact, just in the last 20 minutes or so, actually things look like they're pointing in the red. And the markets, which have just opened here in Hong Kong and Shanghai, are all trading slightly lower. Let's take a look at the Hang Seng now down about 0.4%, the Shanghai Composite down 0.6%. So a bit of a change of sentiment there from earlier in the trading day. We've also, of course, got Malaysia, Singapore, Taiwan as well coming online this hour. Now, one of the markets that has actually led the losses so far is the Kospi. That right now is down over 1%, and largely looks like it's being dragged a little bit lower by the company Samsung, the electronics maker. Now, Samsung, of course, is the most heavily weighted on the Kospi, making up about 21.9% of that weighting. So whatever happens in Samsung obviously has a big knock-on effect for the rest of the index. And it looks like Samsung has had a report out from Morgan Stanley saying it sees a downside risk. Of course, Samsung, we know, makes consumables like mobile phones, but of course what has been driving it all this time to ever higher prices has been its chip business. And Morgan Stanley saying now that the NAND flash chip memory prices are starting to weaken in the fourth quarter. So that business, the core, the absolute driver of Samsung there, start looking a little bit softer than it was previously, and that is perhaps what is contributing to Samsung not performing so strongly today. Right now, Samsung shares are down 3.7%. And can I quickly mention Bitcoin, because Bitcoin is continuing to go through the roof. Right now, so it's been surging past $9,000 for the first time. Right now, Bitcoin at about $9,633, which is really quite incredible. And smashing, of course, forecasts, and of course, analysts and investors all struggling to keep up because it is just making gains so much quicker than they can absolutely keep up with. Of course, we're looking ahead to a big week of economic reports out this week. We've got China, manufacturing, PMIs out, both the official and also the Tyson ones. We've got India third quarter GDP, of course, US GDP numbers on Wednesday, which may be revised upwards due to consumer spending figures, and of course the core PCE deflated, the Fed's preferred inflation gauge, due Thursday, and that may have ticked up 1.5%, and the Bank of Korea may increase its rates when it meets later this week on Thursday, and that would be for the first time in more than 6 years. Back to you.
Rosalind Chin, thank you for joining us and taking us through the Asian markets. We will move on, and the big development over the weekend was the credit rating agency S&P on Friday kept its India ratings unchanged at the lowest investment grade, that is of BBB, with a stable outlook, contradicting Moody's Investors Service that upgraded the country last week. And the stable outlook reflects S&P's view that over the next 2 years, growth will remain strong and will maintain its sound external accounts position, and fiscal deficits will remain broadly in line with its broadcast. The rating agency added S&P last upgraded India's sovereign ratings to BBB from BB in January 2007. And we spoke to Ravi Bhatia, the director at S&P Global Ratings, who gave us a rationale behind this move. Let's hear him out.
We've stayed at the BBB minus, and our outlook is stable. I mean, we've balanced sort of the strong GDP growth, the sound external profile, and the improving and monetary credibility, and of course India's fairly strong institutions against the issues of the fiscal, the large fiscal deficits and the high debt stock, and also the low GDP per capita that India has, which is amongst the BBB minus rated countries, is pretty much amongst the lowest in terms of GDP per capita. So we've balanced that out, and we've maintained our stable outlook. Also, we've seen a couple of quarters of weaker than expected growth. Hopefully some of it is tied to the sort of teething problems around the GST and also the demonetization. But we've seen, a few quarters of less than stellar growth. But in our medium term, the trajectory is strong. So it's a combination of these factors.
But also commenting on the ratings agency, Niti Aayog Vice Chairman Rajiv Kumar said that there was no reason for S&P Global Ratings to keep India's sovereign ratings unchanged. And he added that there is an incomprehensible bias in S&P's decision, and he fails to understand the basis of keeping the ratings unchanged. Let's hear him out as well.
Well, I can't see any reason, whichever way I like to look at it, for S&P to have kept their rating as stable. They themselves say that they expect robust growth to take place in the next 2 years. And when growth takes place, the debt to GDP ratio comes down, and household incomes and savings increase, so that resource mobilization becomes easier. Already there is a huge increase in investable resources sitting in the banks as a result of the demonetization, so that India has enough liquidity, enough investment resources, so that they won't have to take recourse to debt. But the most important point is that, these guys should be concerned more about external debt and not about total debt. And India's external debt is 12%, for God's sake. So where is the danger of India defaulting on its debt services? And if there is no danger, then why shouldn't these rating agencies be upgrading, why shouldn't they be upgrading their ratings for India? I just think that there is an incomprehensible bias in these ratings, which are probably, kept where they are to be able to earn higher rates of interest.
But let's also give you a government reaction to the S&P's decision. Railway Minister Piyush Goyal has expressed satisfaction over the S&P's report, calling it an affirmation of the Modi government's policy, while Economic Affairs Secretary says the ratings agencies remain cautious due to the minor disruptions in the economy. Listen in.
The favorable comments that S&P has given in its report is an affirmation of the policies of Prime Minister Modi's government being recognized worldwide. The report has spoken at length that growth will continue to remain strong. They have recognized that the quarterly slowdown in GDP growth is a temporary phenomena, largely because of the implementation of GST, which has been praised at length in the report.
If you would look at the S&P's statement, in fact, their assessment to my mind on the debt profile of India is far more sort of generous, far more reasonable than others. So it's not that they have taken a very strong view about the fiscal position. I think they're fairly convinced. It's only the current state of play which might have affected their thinking.
Let's go on to money markets then and take a check on the rupee as well as the bond markets. Saloni Dhanuka joins us on the show. Saloni, what do you have for us?
So, well, Agam, the rupee retreated from a 3-week high on Friday, and it ended 0.2% lower at 64.70 levels against the dollar due to renewed dollar demand overseas. Now, surging crude oil prices ahead of the much-awaited OPEC meet this week impacted overall currency market mood, while strength in the local equities market supported the home currency. Now, on a weekly basis, though the rupee appreciated by a good 31 paise, it was still down 0.5% against the dollar on a weekly basis. Now, on the global front, Asian currencies were trading lower, with Chinese renminbi and Japanese yen losing the most, while dollar index declined for the third straight week after the dovish comments by Fed chair last week, and it now trades marginally higher at 92.86 levels in the early Asian trade. Now, coming back home, dollar rupee is trading flat in the non-deliverable forward market. Moving on to bond market, yields rose for the fourth consecutive session on Friday, and it ended 1 basis point higher at 7%. Also, global funds reduced their Indian debt holdings on Friday after infusing for 3 consecutive sessions. They reduced nearly 240 crores according to NSDL data, Agam.
Well, thanks for that, Saloni. We will be watching out for those cues moving in. But on to the stock of the day. Excel Industries has reported an excellent quarter. And let's go across to Nikki Mirchandani, who has more on the details. Nikki, good morning.
Hi, good morning. Excel Industries has reported good set of numbers. Fact end of the earnings season, pretty much done with it. But when you have slew of companies reporting number, one of them Excel, revenue has risen as much as 9% at 130 odd crore as compared to a number of 119 crore. Net profit for that matter has risen 67% at 11 crore. EBITDA for that matter also has grown up by 56%. Margins have expanded at 17% as compared to a figure of 12% in the corresponding quarter. So what has led to the sharp jump in these profits is the net sales, the good revenue along with some cost optimization measures that's aided the bottom line performance of the company. If you see the decline in the raw material cost as a percent to your net sales and your overall expenses as your total net sales has come down. Raw material has as an expense to your net sales has reduced nearly 4% on year-on-year basis. Also, do bear in mind the fact that profits have risen despite this fall in other income. Other income has declined close to 74% at a figure of 0.25 crore as compared to 1 crore figure that we saw in the corresponding quarter. In terms of the shareholding pattern, well, if you'd say promoters have been gradually upping their stake in the company, also the debt profile has been coming down. If you look, promoter now at this given point of time hold 52% odd stake, while public holding nearly stands at 48%. To give you a little background about the company, it's a chemical manufacturing company that we're talking about, and it has a market capitalization for around 775 crore account.
Well, if we were to go by the numbers, we are expecting Excel Industries to open in the green. Thanks for that, Nikki, for giving us those details. But we'll move on to more stocks which may be in the news this morning. We have Shraddha Babla joining us. Hi, Shraddha. What do we have for us?
Morning, Agam. A couple of names starting off with Adani stocks, especially Adani Enterprises, as the Labour Party has closed in on a majority in Queensland, Australia. So all of the Adani Group stocks will be in focus. Moving on, after Godrej Consumer, Dabur and Marico, now you have HUL, which will be lowering its prices or increasing the weights of some of its products, mainly to pass on the benefit of the GST reduction. You also have a PTI report which has said that Jayaprakash Associates has fixed November 28th as the effective date for restructuring of its $150 million foreign currency convertible bonds issue, which is maturing this year. So that name could be in focus as well. Rain Industries, where its subsidiary Rain Carbon is looking to issue new credit facility to refinance 2021 bonds, which could lower costs for the company. You also have Saturn Credit Care, where the company has said they'll be looking to raise funds from the promoter, from Nordic Microfinance Initiative Fund, Cora Investments and IndusInd Bank. These three names, and that will be via the issue of convertible warrants, equity and convertible preference shares. That will be at a price of 335 per share compared to the closing price of 388 as of Friday. You have GPT Infra Projects, where they have said its subsidiary has won an arbitration against NHAI and they have won an award of about 62 crores. So we could see some marginal positive reaction there. And on the back of bulk deals, we had seen a couple of names, bulk deals on Friday for RBL Bank. We have the name of the investor who has exited, and that is Norwest Venture Partners. They have sold 1.4% of their 1.57% stake in RBL Bank. And lastly, DSP BlackRock Mutual Fund has bought about 1% stake in GHCL. So you could see some reaction there as well.
Thanks for that, Shraddha. Well, we'll move on to news in Larsen & Toubro, where the management mentioned earlier about the likelihood of divestment of 2 or 3 companies in the next year. And as per Bloomberg report, the company is in exclusive talks with Schneider for the sale of its electric unit. Let's head across to Darshan Mehta, who's standing by to give us more details. Darshan.
Well, Agam, so this has been reported several times, but now a number has finally come out. So Bloomberg reports that, Schneider looks to buy the electrical and automation unit of L&T for close to $2 billion. What they also mentioned in the report is that, talks are currently on, and they may or may not result in any kind of deal at this point of time. So there's no certainty that the deal will go through. Now, the management had earlier indicated that, they plan to divest 2 to 3 companies. So this could pretty much be the deal that they're looking on. Only JP Morgan has come out with a report indicating what is the possible scenario analysis. And they are saying at a price, this actually deal at a $2 billion implies a 15 times EBITDA of multiple of 15 times to current year's EBITDA. And they're saying that Indian industrial assets generally trade at a higher valuation. But given this fact that, what exactly is happening, the valuations look reasonable as it reflects the long-term opportunity in India. And the deal is in line with Schneider's policy to focus on smaller and mid-size acquisition. Now, for L&T only, this unit had sales of almost $0.4 billion. So this will be close to almost 5 times sales. Margins have been improving. On an EBITDA level, it has been doing double-digit margins for the second quarter and high single-digit margin for the second quarter that went by.
Thanks for that, Darshan. We will be watching out for further developments in L&T. But moving on, online retailer Flipkart continues to diversify its offerings. And Flipkart now wants to act as a corporate agent to sell life and general insurance. Nishant Sharma tells us the rationale behind the move in this report.
India's largest homegrown e-commerce giant, Flipkart, now wants to sell insurance on its platform. Now, according to filing made with the Register of Companies dated September 21st, Flipkart Group intends to add insurance as a category on Flipkart.com, where it will act as a corporate agent and will provide life and general insurance on behalf of insurance on its platform. And now, according to the filing, Flipkart has sought an approval from Insurance Regulatory and Development Authority of India. However, it is not clear at this point of time whether Flipkart has indeed got the approval or not. Now, Flipkart mentioned in the filings that it aims to provide end-to-end transaction on the insurance platform, ranging from pricing, discovery, payment, and even after-sale services on the platform, but will not act itself as an insurer or underwriter. Now, Flipkart over the last 1 year has been trying really hard to diversify its portfolio in order to generate some revenue. Recently it's doing a pilot project of grocery in Bangalore. Then earlier this year it also introduced its private label billion in India, and then also just earlier this month it launched its own made in India smartphone under the billion plus brand. And Flipkart sees insurance as also one of the important verticals for revenue generation, given that it can use its large customer base to sell the insurance products on its platform.
Moving on, Somit Sarkar is standing by to give us the big brokerage calls of the day. Somit, good morning. What do you have for us today?
Good morning, Agam. On the brokerages, first we have is Credit Suisse on Mindtree. Now they have upgraded the stock to outperform from neutral and have also hiked the target price to 600 from 460. Now they are expecting Mindtree to post industry-leading revenue growth and margin expansion from low base. Now company's recent earnings were impacted due to revenue loss from some top clients and challenges faced by the two acquired entities, that is Bluefin and Magnet. However, these revenue challenges are behind as the top client seems stable, and the recently won clients are ramping up and are now in the top 10 client list. Also, the business from Bluefin grew in the second quarter of financial year 2018, and revenues from the revenue decline from Magnet appears to have bottomed out. Now, according to the brokerage, they are expecting the FY20 EBITDA margins to be at around 15% versus 11.6% in the second quarter of financial year 2018. They are also saying that the attractive earnings growth will be supported by the 23% EBITDA CAGR for the next 2 years. Second, we have is Credit Suisse on oil and gas. Now, for Oil India, they have upgraded the stock to outperform from neutral and have hiked the target price to 425 from 300. For ONGC, they have maintained their outperform rating but have hiked the target price to 220 from 190. Now, according to the brokerage, higher oil prices is a double-edged sword for these upstream companies, as it not only improves the financial of the company but also increases the near-term cash flow risk due to rising subsidies. Now, according to the brokerage, every $10 per barrel rise in crude oil prices adds 22 to 28% to EBITDA and 20 to 30% to the equity value of ONGC and Oil India. Also, higher oil prices mean FY18 budget needs to pay for higher fuel losses. Additionally, OMCs have paused the fuel price hike from post-October 2017, which is a speed bump to the path of zero subsidy. And this is anyways a short-term risk for these upstream companies. The long-term risk reward still remains favorable. Now, ONGC's capital expenditure efficiencies have improved, and Oil India has seen a lower cost, which according to the management is sustainable. Also, oil around $60 per barrel is a sweet spot for ONGC and Oil India, with strong earnings growth and low subsidy risk in financial year 2019. Now, they have raised the EPS estimates for ONGC for FY18 and 19 by 8% and 2%. They have also raised the EPS estimates for Oil India for FY18 and 19 by 10% and 9%. Going forward, the triggers for both the upstream companies will be restart of regular LPG and kerosene price increases from January 2018, 20% gas price increase over the next 12 months, and cost efficiencies.
Well, thanks for that, Somit. Of course, there is a lot to talk about over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The Commerce and Industry Minister Suresh Prabhu said the centre will support iPhone maker Apple to set up a manufacturing unit in the country and is awaiting a formal proposal from them. He also said that the centre is willing to call all state chief ministers who are willing to give them the best deal. A single election ensures more effective policy planning and implementation and reduces pressure on resources, Prime Minister Narendra Modi said, while calling for a discussion on the concept. He also echoed views expressed by President Ram Nath Kovind and Law Minister Ravi Shankar Prasad on the separation and the balance of powers between the execution, legislature and judiciary. And Bitcoin surged past $9,000 for the first time less than a week after topping $8,000 and taking its year-to-date rise to more than 850%. The price of the largest cryptocurrency by market value is soaring as it gains greater mainstream attention despite warnings of an asset bubble. But with that, it's a wrap on this edition of Daybreak. All you need to know is up next. Stay tuned into Bloomberg Quint.